Welcome. This is a BGVC analysis, and today we're talking about an earnings report from Micron Technology. And look, it wasn't just good. It was so revolutionary that it honestly looks more like something you'd see from Nvidia. We're going to break down how a company known for commodity memory just put the entire semiconductor world on notice.
Okay, let's just get straight into it, because these numbers are genuinely shocking for a company that's famous for its brutal boom and bust cycles. This report, it doesn't just signal a good quarter, it signals a fundamental transformation of the business.
Take a look at this number, 68%. Just let that sink in for a second. Is this the gross margin of some high-end software company? No, this is Micron's guidance for its next quarter's gross margin. A number that was once completely unimaginable in the memory business is now their forecast.
And it's not just that they beat Wall Street's expectations, it's the scale of the beat that's just so stunning. The revenue number was great, yeah, but look at the earnings per share, more than 20% above what anyone was expecting. That points to a level of profitability that just changes the entire story here. So this brings us to the big question, right? How on earth did a memory company start posting financials that look like they belong to a chip designer, like Nvidia? What exactly changed? Well, the answer lies in a huge problem that has been holding back AI development for years. It's a bottleneck that engineers call the memory wall. And, as it turns out, this problem has become Micron's single greatest opportunity. To put it really simply, AI chips, like the ones Nvidia makes, are getting faster at a truly incredible rate. But they're hungry. They're constantly starved for data because traditional memory just can't feed them information fast enough. All that incredible processing power is basically useless if it's just sitting around waiting. The solution to this problem is a pretty revolutionary technology called high bandwidth memory, or HBM. Now, instead of putting memory chips far away from the processor, HBM stacks them vertically, like a skyscraper, and puts them right next door to the GPU. This creates a massive, ultra-fast superhighway for data. It's what allows us to break through that memory wall. And you have to realize that this isn't some static technology, it's evolving at lightning speed. Right now, the gold standard for training these huge AI models is something called HBM3E. And it's Micron's mastery of this specific product that is the engine driving these unbelievable financial results. Okay, so that's the tech. But this isn't just a technology story. It's also a story of brilliant strategy and even better execution. Let's look at the competitive landscape. For a very long time, the HBM market was pretty much dominated by one company, the Korean giant SK Hynix. But just look at this chart. While Hynix is still the leader, notice how Micron has just aggressively closed the gap. They are now fighting neck and neck with Samsung for that number 2 position. So how did they do it? Well, this slide shows the playbook, and it's brilliant. First, they made a super risky but genius bet to just skip an entire generation of HBM. Then, they focused on a key advantage, making their chips 30% more power efficient, which is a massive deal for data center costs. And crucially, their timing was perfect. They executed just as their main rival, Samsung, stumbled, which let them sweep in and grab huge, critical orders. This one quote from Micron's CEO on their earnings call really says it all. The demand for their best, highest margin product is so off the charts that they have literally nothing left to sell for the next 2 years. That gives them incredible power over pricing and a clear view of their revenue for years to come. So, what does all this mean for the company's valuation? This is where the story gets really compelling, because the old rules you'd use to value a memory company, they might not apply anymore. Okay, so the stock price has been hitting all-time highs, but that picture is a little deceptive. Historically, the stock traded at around 25 times its earnings from the past year. But when you factor in the explosive profit growth that everyone expects in the future, that multiple shrinks dramatically. It goes all the way down to under 9. This suggests that even at record prices, the market might still be underestimating just how profitable Micron is about to become. So here's the key takeaway. The market is finally starting to see Micron differently. It's no longer being valued as a boring, cyclical commodity business. It's being seen as a core part of the AI growth story, and that means it could deserve a much, much higher valuation. Of course, no investment is a sure thing. There are always risks. And the biggest question mark here, the elephant in the room, is whether the entire industry is getting ahead of itself. You have Micron, Samsung, and SK Hynix all spending tens of billions of dollars to build more HBM factories. The number one concern is a potential supply glut in 2026 if AI demand doesn't keep up with that new supply. And that brings us to the final and most important question. It's a question that the value of not just Micron, but this entire AI supercycle really hinges on.
Ultimately, a bet on Micron today is a bet that the demand for AI compute and the data that feeds it is going to continue its exponential rise. It's a bet that this time really is different, justifying one of the most aggressive and expensive factory buildouts the semiconductor industry has ever seen. The answer is going to define the next decade of technology.